Hello and welcome everyone to this important update on Tesla. As you probably have seen, Tesla is struggling a little bit over the last 2 days, and we want to check out what is happening and then dive a little bit deeper into the LEAP strategy and the Robotaxi Simulator to predict and put on trajectories the way Tesla stock and the Robotaxi rollout is likely to happen. So first of all, let's take a look at the stock. In pre-market, it's down yesterday 3.55%, and in pre-market today 2.2% as we speak. I can make this a little larger for you guys. So this is not a great situation, and it's fully based on Elon's tweets. So Elon is attacking the big beautiful bill by the GOP in Congress that has just been passed with one vote majority in the House of Representatives, is now going to the Senate and is being renegotiated. Before we jump into Robotaxi, I just want to quickly comment on that because people on X are split over that whole situation. Half of the Tesla bulls say, please, Elon, stay away from politics. It's toxic. It's horrible. Don't attack Trump's bill. Don't attack the GOP for passing this bill. Now, here's why I have to disagree and point out the bigger picture in politics. The problem is this bill increases the debt of the United States very dramatically by multiple trillions of dollars over the next 10 years. And the problem is, while debt has worked so far, we have reached a very important inflection point that means this time is actually different. We have reached the point where 25% of the entire tax revenue of the United States is being spent only on the interest on the debt. A quarter of every tax dollar that is being raised by the United States per year is being spent on just servicing the interest, not paying off, just the interest of the debt. That's what's called an inflection point, because you're getting to the point. When you think about the military, Social Security, Medicaid and Medicare, all of these things are now smaller, each of them, than the interest expense. And at that point, you're reaching a critical inflection point, because from here, what if interest expense doubles again? Then you're spending 50% of everything the entire country makes in tax revenue just on servicing the debt. You know how this ends. This is the point where things go really bad. Now, we could cut spending by 6% across the board. Everything gets cut 6%. And the entire budget would be balanced, including the tax cuts that are very important for the economy. So Elon is pushing back and saying this thing cannot pass. Other experts who are very smart finance people, you don't even need to be that smart. If you spend a quarter of your income on servicing the interest, do not take on more debt. That's a very, very bad idea. Listen to the All In podcast, Chamath and the whole team. Everyone says the bond yields are taking a hit now. Everything looks bad. We need to stop spending like drunken sailors. And I think it's worth for Elon to expend some capital here, even though if we don't want to hear it as Tesla shareholders or investors, of course, that's not great for the stock as we see here. But what choice do we have? Elon has a very important say in this whole thing, and we cannot just all sit here and see the country going down the drain. So that's my little political excursion here. Let's go back to Tesla stock. So these losses we see here, 5% or nearly 6% in total over the last 2 days, are not great. Let's see what happens today. But there's a limit how much Tesla can drop because of these phony, political debates. Phony not in the sense that they're not very important, but phony in the sense that they should not drop the stock like this. That has nothing to do with Tesla stock. Why is it bad for Tesla stock? We don't know. It's irrational. So let's go into the Robotaxi. One more comment, by the way. The Fear and Greed Index. You guys remember where this thing was? It was here at 4 just a month ago, or maybe 6 weeks ago. Now we are back into the greed territory, and soon we might reach extreme greed. What does it tell us? The more afraid the market is, the more I want to buy. The more extreme greedy the market is, the more I want to sell. So we are now getting into a territory where the market gets a little sketchy. We are still far off from that, but we are approaching it pretty rapidly. And there were some smart people at Fundstrat, for example, on the macro side of things, that predicted the first half is going to be great of 2025. And the second half, we will run into problems in Q4, late Q3, early Q4, the usual suspects. September, October, we might see a major correction. Now, first half was a little different because of tariffs, but now we are up with the market. And this is a dangerous situation that we might be setting up in the coming months for the market. And the market corrects 20% Tesla is going to get hammered regardless of Robotaxi. So we need to take this into consideration, what's coming up. I'm concerned. I think it's a very reasonable thing to predict if this goes further up, the market goes up, the greed goes up, that we run into real problems end of Q3, beginning of Q4. So keep that in mind for what I'm saying next. Now let's jump. Oh, did I even share this? Here's the fear and greed index. So here you see, we were here at 4 6 weeks ago, and now we are at 60. At 100, in extreme selling territory. So let's jump right into the big thing, which is the Robotaxi Simulator. I have some updates for you guys. You can see this whole thing is now expanded a lot. I modeled out everything from June, from this month here, June, into all the way to September 2026 here. And let me explain in a second why this is important. So if you follow the channel, you know that I believe that the Robotaxi launch of Tesla unlocks a new era of autonomy, because we know that Tesla is far ahead of the rest of the world in terms of autonomous driving. You know that I'm always mocking the LiDAR people at Waymo. And you know that Tesla has invested by far the most in data collection, but also in AI development on Robotaxi. And it's also the only company that has a scalable model on the back end in terms of how expensive are these things that they're churning out. They can produce millions and millions of cars at the most competitive price that will be self-driving. And they have a fleet of 7 million cars already on the road that in theory are self-driving, or let's say probably 2 to 3 million with hardware 4, with their latest hardware, that are owned by people, by Tesla owners that could send them to work as robotaxis once FSD works flawlessly. And we have now in June 12th, that's at least the rumor, that it's June 12th where we launched this in Austin, Texas, where for the first time ever, Tesla is going to deploy commercial robotaxis. And the big question in the community now is, okay, what does it mean for the stock? But if you go back to the stock, here's where the stock is. The stock is, well, up a lot from 275 on, back here on when was this, May 6th. If you go further back, we had a very bad start of the year and all the way down to 222 in March. And now this thing is up. Now we have this political drop here, but I think it's a very phony drop. If you look at this chart, this looks like a chart going up. You see that here on December 17th, we had that peak of 480 effectively. Then Jerome Powell announced that he's a little more bearish on the whole rate reduction. And then we went on this market route all the way down here. That's where the fear and greed index hit bad numbers like 4. And since then, we're on an uptrend. And I think, logically, at least, it's very likely that we reach these highs again or getting close to that because we have a lot of excitement. Now, in the big scheme of things, my fair value of Tesla in 2025, assuming Robotaxi launches, is close to $1,000. I actually have some fine tunings on the model, so it's in the 800s in 2025. That is a fair future value of the stock if things come to play the way I think they will. And so we are, even if we go up here, we are far off these potential fair values of Tesla. How do we deal with that and what do we do about it? Hey, if you want to stay ahead of capital markets and the next Tesla moves, join us in Pioneerlands. Here we track Tesla, capital opportunities, AGI disruption, and politics. It's your critical information advantage in the age of AGI. It's free and the link is in the description. Let's get back to the video. So the Robotaxi Simulator is my tool, my model that helps us to understand a little bit better what are we even dealing with and how do we model out whatever happens in the future with Robotaxi, and how is Robotaxi tied into all of these stock price discussions. Now, this simulator basically has 3 scenarios. It has the slow scenario, it has the expected scenario, and it has the fast scenario. And these scenarios are all about how many robotaxis are on the road and deployed. So in June, the slow scenario assumes 20 robotaxis make it out. We launch with 10 to 20. So 20 means there's not much growth, right? The expected means 30. So we grow from 10 or whatever the initial day 1 deployment is to 30. Now, if there's any delayed into July, of course, this shifts all 1 month to the right. The fast, we had 50. So these are not big differences in month 1, but they become big differences very quickly. So if you go to December, in the slow scenario, we had 200 robotaxis deployed in December. So that would pretty much be a failure, in my opinion. That means we run into issues. Tesla has issues. There might be, robotaxis getting stuck. unhappy and they have to slow down the expansion, which wouldn't be great. In the expected scenario, I expect 2,000 robotaxis to be on the road and a second city unlocked, maybe in Texas, very likely in Texas. Maybe a second state already being unlocked or prepared that then comes to play here. 2,100, that's significant. But in the fast scenario, we are doubling this to 4,000. The fast scenario would mean we deploy 10, then it works pretty well. They're scaling up very rapidly and see, look, we can deploy 200. We can deploy 500 already in August. We can deploy 1,000 in September. And it basically works, right? It basically works. Remote operators are not really required in most instances. And then they double it from there, probably still in Austin. Wipe out Uber. Everything is fine. Add another city here, maybe somewhere in Texas, and then keep scaling this and reaching a monthly growth of 50%, which is, of course, extremely high. But this is a function of this being prepared very well. So what I did in the simulator is I translated all of these things into a very important number. And that very important number is how much money they actually would make. You see it here, the margin. Here's the actual margin that comes in, right, in $1,000. And here you see the annualized margin, right? And here you basically see the impact on free cash flow increase annualized as a percentage of the 2024 cash flow of Tesla. So what does it mean? Complicated thing here. It means all of Tesla makes a certain amount of money. It's called free cash flow. 3.5 billion in 2024. 3.5 billion of cash flew into Tesla in 2024. And the question is, that is what this all hinges on. I will get into a chart in a second that will be very important for you guys. But the key question is, how are these numbers of robotaxis scaling, translating into cash coming into the company? And how does this cash translate into a percent of the total cash coming into the company in 2024? And why is this so important? Because I have a certain thesis. And that thesis is that there's something called a forcing function for the market, for the stock price. What is that forcing function? That forcing function means that there are a bunch of institutional investors out there. I call them low information investors, right? People not like you and me who are into that stuff and predict the future accurately, but they're sitting there, they're just doing their job. They're not using their brain too much to think about the future. They're just typing it into their charts and say, whatever, I don't care. I don't know what robotaxi is. I don't know what AI is. I just type my numbers in. And a forcing function is anything that forces the analysts and all these hedge funds, and most importantly in the banks that recommend things to the hedge funds or comment on things, that they have to basically say to everyone, dudes, Houston, we have a problem. We have a solution. Tesla is unlocking an enormous new free cash flow stream. And when do they have to say that? Well, they have to say that when reality catches up with the promises of Tesla. And when is that? When they see massive amounts of dollars coming into Tesla that start unlocking that new stream outside the conventional EV business and energy business. When the robotaxi business becomes a real thing. And when does it become a real thing? I think, or I would estimate, that once we had 5% of the free cash flow of all of Tesla in 2024, if we hit 5% of the total cash flow of 2024 through the robotaxi stream, that is where the point, that's the latest point where the forcing function kicks in. So if you make 3.5 billion, what is 5% of that? Well, it's roughly something around 160, you can do the math, 25 million, right? Annualized in free cash flow. And how do you analyze it? You take the monthly number and take it times 12. That's your analyzed run rate of free cash flow. So in this here, in this line, for each scenario, I mark this with yellow. So to make it easy for everyone, yellow means that is the month where that number of free cash flow annualized increase through robotaxi exceeds 5%. So the month where we say, oh my God, if this all happens, we have more than 5% free cash flow of 2024, which then has a trickle effect, a trickle down or an escalating domino effect on all the analysts who say like, wow, damn it, 5% is serious, because you have to put the 5% into context with the growth rate. If it's a larger 20% per month growth rate. You don't need to be Einstein to see if you have 5% in this month of annualized additional cash flow. Well, what will it be? Well, you see exactly what's going to be growing very quickly. Now I put all of that into an easy to understand chart here. Let me just increase this a little bit here to make it easier to see. So here you see the chart that I prepared, and this chart, oops, this is cut off here. Why is this cut off? Because I have the view restricted. So here you see this chart. How do I make this better visible? This chart here. And what this chart shows you, the green line is 5% of Tesla free cash flow 2024. In other words, that is the line, in my opinion, where we cross into the forcing function. And here you see the projected lines of the fast scenario, the expected scenario, and the slow scenario of Robotaxi scaling. And where do these cross the green line? Here and here. In December 2025. And in February, March 2026, the fast versus the expected scenario. So here you have it. And what does it all mean? Well, we are interested in the stock price. We are interested in this thing here. You remember the stock price that was at 480 up here, that dropped to 220 here, and that is now back to 330 today. We are interested in the stock price and where it's going to go. Now, the forcing function that I just explained here, let's go back to the forcing function, December and March, means that if we are on the fast trajectory in December, there will be a revelation or recognition by the analysts that say, oh my God, that thing is actually here. And that is the free cash flow trajectory, right? And that will very quickly reach 100%. I could go back into the table to show you guys that. Expected. Here you see the percentage of free cash flow. You see it down here. Where do you see the percentage? Here you see the percentage. And what you see is it reaches 100% of Tesla's entire cash flow of 2024 in July, August on the fast trajectory, which I think is not necessarily going to happen, but we are tracking it. So in this crazy fast scenario of deployment, where you deploy 115,000 robotaxis by next year, August, you're already at 121% of free cash flow. Do you understand what that means? It means you just doubled the value of the entire company of Tesla by August next year. That will not only double the share price, it will much more than double the share price. Because look what happens in September. Once you have to look at the growth rates. They are not going to end anytime soon, because once you unlock robotaxis, you can deploy tens of millions, potentially hundreds of millions of these things for many reasons that I went into a different video. So the analysts are not that dumb. They're just waiting for that inflection point. They just say, well, how do we know it's not the slow trajectory? Well, we don't. This could take decades, what I'm talking about here, but it could also take months. What is the truth? Well, I believe it's much closer to taking months to get to these high scale scenarios than decades, but who knows? People want to wait and track that over the next months. But this is the decisive point why that number is so important, the greater 5% number in conjunction with a growth rate monthly. What does it all mean now for our strategy? As investors, most importantly, not for investors. Investors can just hold their stock because they know it's going to happen anyway. But if you have stock options or leaps and time is of the essence, well, let's assume for a moment that these expected or fast scenarios is what we are going to deal with. And not the slow one. The slow one means we are screwed. If you're a leap holder and you have the slow one, we are screwed because Robotaxi effectively failed to deliver on its promise. We are in December 2026. And we have deployed, if we are in September 2026, we have deployed 1,000 robotaxis. I would say officially the thesis has failed, even though I believe they would still deliver it at some point. But the options, the leap options thesis is clearly completely destroyed at that point. And we can't wait until then. If this slow trajectory is shaping out to be the real trajectory, we need to jump ship on the options because we will get terminated. Now, how does it look like in the other scenarios? Well, I think the challenge here is the forcing functions goes in both directions. If you see the earliest December and in an expected scenario in February, March, that forcing function kicking in, what is happening before the forcing function kicks in? Well, the stock runs on hope, on increasingly lower levels of hope, because it scales up and we are reaching that point. And the point might be not 5%, maybe it's 3%, maybe it's 2%, maybe it's 1%, because you have a lot of analysts like Dan Ives and others, Adam Jonas of Morgan Stanley. They're looking at that and they understand it. Maybe they will get more aggressive earlier, but I would say the majority of analysts are going to wait until 5%. So if you're in that boat and the clock is ticking on your time decay, on your options, it is a little bit of a problem, because until December or March next year, we will be dependent on market sentiment. And what does it mean? Here's what I'm going to do. I do think that the sell-off right now is phony. This sell-off is stupid and phony because it's politics, and Elon's actually doing the right thing. It has nothing to do with Tesla. I think the FUD people are on it. So I think this drop, I don't buy it, that this drop is sustainable. I think this will turn around probably next week or whatever, because there will be some resolution of the bill. Either it passes or it doesn't pass, or it gets improved or it doesn't get improved, but the whole issue will go away. And then we are back to robotaxi questions. I think Tesla has underperformed since the market went up, and I think it has a good chance of catching up. And there will be initial excitement about robotaxi. I think there will be more good news than bad news on it, and I think the stock will go up. But if the stock goes up, let's say to 380 or 400, I think that's more likely than not in 2025. The problem is we are here, right? Here is the forcing function that forces the stock up. But what happens in between? We cannot just sit here and wait 6 months on leaps. This is going to cost us a lot of money in terms of time decay, depending how far out of the money you are. My assumption right now, my thesis is we are more likely than not to have a run up here of the stock. And when we run up by July, let's say by July, maybe in the next, if we run up into this 400 territory, I would be very tempted, given the fact that the market might have a little crash here, or at least the risk is getting very high with this fear and greed index. I think if we go up, I would be very inclined to significantly reduce my leaps by then and not wait until here. Because the risk of a major drop in between, when there's FUD, when there's market panic, whatever, Tesla will be hit very hard between there and there. This is my theory. If we don't go up, of course, then the prices are more attractive and less attractive to sell. So we have to see that. But if we have a run up towards 380 even, I would start, reducing that leap position. Even if it then goes up to 400 or 500, we're missing out a little bit. That's not how you should think about it. You should think about what are the odds if you sell at 400 that you can buy back in at a later point in time at 400 or 420, 430. Because if you sell at 400 in July, the stock goes to 550 and you're missing out on that, but then crashes back to 430 or whatever. If you buy the leaps back then in, you get them cheaper than you sold them here. So selling here at 400, you get more money for your leaps than buying them here, than selling them here for 430. So that is my theory. I think if I see a run up, I want to reduce my position. If it's early, if the run up is in June or July, I have a very bad feeling about this situation here in September, October, November right now in terms of macro. And the forcing function will be somewhere here. If there's any delay in robotaxi, this entire thing shifts to the right. So the risk of this being even delayed is high. And even if it's not delayed, this is not going to sell any institutional analysts here, what's happening here, in my opinion. It's going to sell them enough to drive it up a little bit, but this is not going to sell anyone to drive that stock to 1,000, and is my theory. So that's how I see it. If this goes up, I'm out of some of my leaps, like a significant chunk, because I think we will be able to get back in before the forcing function at a better price. But I will keep you guys updated. Go to Pioneerland, pioneerlands.net. You see it in the description. There you get the model if you're a citizen, and if not, you can still partake in all the discussions with very smart people. The biggest investor group in the world, Pioneerlands, now on Tesla. You have the highest Tesla AUM holding in the world. Very smart people, great people, and it's a lot of fun there. So I hope to see you there. I hope that was helpful, and see you very soon.